This is another video focused on profit taking, and we want to relate that concept to what's going on with our breadth calculations, and that could mean breadth crossovers, what the middle ground is doing, what the stocks in the balanced area are doing, or what the overextensions in breadth are doing. So again, these are all things to kind of put together the puzzle with when it comes to trying to make money with the scanner. So again, we're going to focus on the S&P 500 as one of the barometers for using the breadth as a calculation to look at profit taken for this video. But I want to just simply look at the Shanghai first. And we're not going to spend a lot of time on this, but the Shanghai, this is January 26th, and the Shanghai's been doing very bad here. But what I want to do is I want to pull up our breadth on our weekly, and I want to basically just look at breadth crossovers on our Shanghai first, and then we're going to get in these S&Ps in a second. But if you'll notice, going back in time to July 2014, this crossover from negative profile breadth to positive profile breadth has been really positive, and we basically stayed in that mode up until the peak here. And this is our long-term weekly breadth crossover, so I'm just kind of taking the middle ground completely out of the equation here. Um, Went to negative breadth, red over green. Great shorting opportunities here. Great long opportunities and short opportunities again. If you look at the middle ground here, we're going to be able to talk about this in a little while, but been very mixed up here. Very high middle ground. A lot of stocks were in the balanced area on this rally up in this breadth crossover. So, did that have legs, and did that have the confirmation of stocks trading above profiles like you want to see? No, it didn't. So when we crossed over negative again, that's when we had the you heard the plunge sound. All right, but let's go back to the S&Ps. Let's go back to our index grid, and that was a real simple example of breadth crossovers, and we talked a little bit about the middle ground there. I'm aware of that, but let's go to the S&Ps. This is a little bit more trickier situation. It has been something that's been, without question, okay to be long, not okay to be short from way back when, with certain exceptions, of course. May 2012 short into late June 2012. But as you can see, a lot of times, we were supposed to be long, all right, and a couple of things in the middle here have caused us to get short or go to cash on our long term. But from a profit taking standpoint, um, these crossovers have been really important when it comes to being able to kind of regulate your portfolio, in my opinion. Now, the first of the year, and even into mid to late December, we've started kind of having some connotations here of being breadth negative, and as you look at that middle ground going, you know, through the roof here when it comes to our long-term breadth, that means that these crossovers actually mean less and less. That means we're going to have a until we get some of this, middle ground starting to cave in, we're going to have a market that almost kind of gets spring loaded and compressed, and we're going to have a move one way or the other. This time, considering that we're kind of trailing down lower highs on our index itself, and then getting breadth negative, the probabilities of this happening on the downside obviously were in place. And then when we had the first week of the year, the first day of the year, starting to turn negative on our long-term breadth, that was a clear-cut signal. But we're focused on profit taking, so these crossovers are very important to look at your long-term portfolio on the daily and weekly when it comes to profit taking. But when do you start focusing on overextensions and instead of just the crossovers? So when we have something, um, in my opinion, that gets above the 60% into the 70%, you've got to kind of put your antenna up as far as, and right now, if you go back to our calculations, we're looking at 44.38% on the negative side. If you look at this on a long term and you get into this, and I'm looking at this right now, if there's a 70 minus 7, there's 60%. When you get into these big moves over extensions one way or the other, you've got to be looking to take profits on those and sit on the sidelines and wait. Now, on the 60-minute, this is where you can really use the extensions. It rarely happens on the long term. Sometimes it happens on the intermediate when you get into those levels, but on the 60-minute, because these are short-term gyrations, we get into these overextensions quite a bit. And if you'll notice, this is the price of the S&Ps down here, and when we start getting into the 78 minus 5, the 91 minus 2, these are 60-minute hourly changes. And when we get into these overextensions like that, you'll get some really good profit-taking mechanisms. Now, I'm not saying those are go long situations, but if you look at this crossover to negative that happened here, and again, I'm paring it down here. We're going short. We're going short. This is our short term. We're finding inflection points to sell along the way. As this breath stays negative on our short term, we go to positive. But again, before we went positive, we went into a really big valley here when it comes to overextended, 91 minus 2. Here was 82 minus 3, and then we got 89 minus 3. So these are overextensions where you might want to start looking at the profits. And when we stay negative and you rally back up in these situations, you're looking for the long-term inflection points to pay attention to. What do I mean by that? To re-enter the trade. That's actually another video, but I'll just go into there right now. I'm all over the place. But when we look at the S&P minis, I want to take a look at, these are the long-term inflection points, the 1953s of the world, the 1918s of the world, the 1904s of the world. When we start rallying back up into those areas and that breath stays negative on the short term, you got to be looking to sell those situations. All right. And as we sell those situations, how do you know when to take profits? You've got some options. Going back to our index grid and going back to our S&Ps and pulling up our breath on our short term, the options are overextensions, crossovers, and middle ground. These are obviously overextensions. You see where the valleys in the index price happened. And when you get these crossovers, the overextension, then you've got the crossover, then you've got the confirmations that it's okay to get long again. We haven't had any serious middle ground opportunities, as I'm showing on the 60-minute, any kind of elevated areas except for maybe back in on the 21st, but again, nothing really overextended. So the middle ground hadn't come into play in this particular graph. We've really stuck with, what's the long opportunities on the short term, what's the overextensions, and what's the crossovers when it comes to taking profits on longs or taking profits on shorts.